Hello, everybody. First of all, I'm sure you've been all quite worried about my food poisoning. I'm about 99% normal now. I've got to say, it was mentioned during my semi-absence by some of my content contributors how tough this job must be. I don't see how Tim does this for 19 years. Try doing it when you're deathly sick and have to suffer through a day like Tuesday. There's nobody else. So yeah, you're stuck with me because ain't nobody else could do this. I wanted to do a video of the 18 ratio charts in my pairs watch list. You're gonna see a pretty consistent theme, which is more or less, golly gee willikers, when you look at equities measured by some real money measurement, be it gold, be it constant dollars, things sure do look headed for disaster. In fact, 2024 may well be the year of the bear, which, the United States is, unless some amazing new presidential candidate comes along, the United States has had it. Either of the leading candidates now will basically destroy the country if they win next November. So it's going to be a very interesting year as the equity markets inform the political process, because the Republicans are not going to want to help out in any way they can if the market's in a free falling crash, because equities crashing would be great to get them in power. So yeah, they're just going to stand aside and cross their arms and watch. But as we go through these, you're going to see that again and again and again, these gargantuan tops whose present price levels are pretty damn near, super pricey, that just look hosed completely. So I say all of that because I don't want to say the same damn thing 18 times in a row. So I'll just kind of describe what we're looking at as we thumb through them, and some may warrant some extra comment. This is the all world index divided by gold. And mind you, because a lot of these are based on data which is generated, say, monthly, these aren't like up to the second. This data may be 6-7 weeks old, but these are such long-term charts, it really doesn't matter. Here's the Dow Composite divided by the money supply. Giant diamond pattern there, and preceding two instances of amazing tops. So yeah, Tom Lee and Cathie Wood and Jim Cramer and all the rest of them are going to look like screaming buffoons in about a year. And for my Sloper accounts, I money back guarantee on that. Money back guarantee for all the money you've given me. Here's the NASDAQ Composite divided by real money. Now, tech stocks are a queer beast, if I can use that term, because they have pushed into what should have been a topping pattern. So I don't touch NVIDIA, I don't touch the semiconductor index, I don't touch the cubes, I don't touch anything techy. Tech has just gone bonkers. So those are some of the weirder charts here, definitely. Here also is the Dow Composite divided by gold. And you can see that large pink top in formation. These are very slow moving. That's already like a decade big. Here is the same thing, the Dow Composite divided by real money supply. This is the US Financial Index divided by gold. And you can see that what we're experiencing now is eerily similar to the top that we were forming in the late 90s and the early aughts. And you can see what happened afterward. This one is a little bit different because it's simply showing the NASDAQ divided by the Russell. That is to say, what is tech doing versus the small caps? Answer, never higher in the history of the universe. 13 billion years of universe history, and has never been like this. Highest ratio ever. Draw your own conclusions. Same thing except S&P this time. That is to say, tech stocks NDX 100 divided by the S&P 500. Highest in history. And one last one, NASDAQ 100 divided by the boring old utilities, highest in history. So if the day comes that Apple and NVIDIA and Google and Facebook stop being worth, PEs of 90, then look out below. Here's the Russell 2000 divided by gold. I've traced out, as is quite obvious, two major reversal patterns there. We have not exited the most recent one, obviously. Here's the S&P 500 divided by money supply. Fascinating chart here. This goes back many, many decades. And it illustrates the Fibonacci on this, which is just eye-poppingly, insanely cool. Because what on earth should Fibonacci levels have to do with a ratio chart, for God's sake? But it was repelled perfectly in November 2021. It was repelled perfectly in the summer of this year. And it's got plenty to go to the downside, I would say. Here is the sort of argument about how thin this rally has been. This is the equally weighted S&P divided by just the plain old S&P 500. It has been falling for all year. It has been going down all year long, meaning what? Well, meaning that the Magnificent Seven is the only thing going up. The equally weighted S&P has been garbage compared to the very heavily weighted, normally calculated S&P 500. Transports divided by money supply, probably the most boring chart of all these. Goodbye. XOI divided by money supply, very cool. Very, 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 very expensive. And that's why I'm very pleased to have my ConocoPhillips and Schlumberger puts. I think oil is headed for, and oil companies are headed for, an historic drop. Here's the NASDAQ Composite by real money. It's in the midst of this super long wedge that's been in place since the financial crash, great financial crisis. Which speaks to the amazing strength of tech stocks. Duh. Here is what we used to call the most important chart ever. Maybe it still is. We were within this channel since Gerald Ford was in office, even Richard Nixon maybe. And that failed in the spring of last year. So the kind of a sea change in our economy / financial landscape. Always interesting one. Here's the XME divided by the GDX. That is to say the mining companies divided by the precious metal mining companies, suggesting that if historical trends hold, that stocks like Alcoa and Freeport-McMoRan will be vastly weaker than, say, gold miners. And the last one, EFA divided by gold. That is worldwide stocks, SANS North America, divided by gold. We're like right smack dab in the middle of that kind of egg right there. And if we can break below that, I think that'll speak to a deliciously horrific 2024. And with a twinkle in my eye, I shall end it there and leave you with that.